Man, I still remember that call like it was yesterday. Pick up the phone. Hey, Ray's Jane. Oh my gosh, Jane, how are you? It was so good to hear from her. But there was stress in her voice. Hey, Jane, what's going on? Hey, I need to talk to you about refinancing my house. We have an amazing rate on your mortgage. What's up? These credit cards. Ray, I'm a single mom. Okay, Jane, are you able to pay them down every month? No, I'm not. I'm just getting further and further behind. So you're telling me the balances, are they going up? They are. In fact, I'm getting to the point where kind of having to put, groceries and utilities and stuff on them. Okay. Tell me a little bit about the credit cards. On average, what are your interest rates? 21.99%. How much are you talking about in debt? I said. I think you said $25,000. Jane, we got to create a plan. Let's talk about this. Okay. You own a house. You've had it for a good few years. You have that amazing mortgage rate. I know talking about a refinance may not make sense, but maybe we should talk about a home equity line of credit. Ray, that's called you. I called you to talk to see if it would make sense to do a home equity line of credit, but I don't really know what they are. I don't know how to get one, etc. Cool. Hey, everybody. Welcome back. Ray Williams, Mortgage Advisor Group. Today, we're going to talk about home equity lines of credit and should you use them and some risks and warnings before you pursue one. So, Jane's situation. Minimum payment on the credit card's $700 a month. If she made those payments, it was going to take 441 months to pay off the credit cards. The concern she expressed to me was, I don't want to use my home equity. I don't want to refinance. I have a 3.25% interest rate. Okay. Jane, you told me you're not paying more than the minimum payments. And right now, guys, we're sitting at a time where the Fed has been raising the Fed funds rate. Did you know that the credit card rates have been going up? If you're carrying a balance right now, your rate on your credit cards, it's been going up. So what is a home equity line of credit? Line of credit will take equity from your home, like a credit card tied against your house. Lower interest rates, more flexible terms, longer period of time to pay them off. You heard me say that if she pays the minimum payment on that debt, it's 441 months. So slashing the cost of interest. Here was my plan for her. But before that, let's talk about some of the risks her and I discussed. There are the first risk was, Ray, what about the housing market? What if it goes down in value? Valid. Jane, you have at this point in time over a couple $100,000 in equity. Really, if I would have asked you 5 years ago, do you think you'll have all that equity when you buy this house today? You would have said, Ray, you're batshit crazy. That house will not go up that much in this period of time. So, what are the stats? In Colorado, as an example, 4.5% appreciation over 30 years of data. Okay. So, more importantly, though, do you trust yourself? Meaning, if you take out a home equity line of credit, are you going to be your worst enemy or your best friend? So what we did, and I'm going to talk about that in a second, is one specific thing. What if your credit card balances are so high that your credit scores have dropped? If that is the case, then a cash out refinance rather than a home equity line of credit may be the way to go. And yes, I know the sacrificial lamb becomes that low mortgage rate. But if you're getting further behind, you're not paying the credit cards off. If we took the rate on your mortgage and all those credit cards and put it together, we would come up with a blended cost of borrowing. And you'd be surprised it's no longer the rate on your mortgage because you have the credit cards as well. So what did we do with Jane? Where did Jane end up? Well, I showed Jane that by paying off the credit cards into a home equity line of credit, but then paying the same amount towards the HELOC was the equivalent of paying off the cards in 27 months, freeing herself of that stress so that she could show up better as a parent, as a significant other. And at the end of the day, she paid off her house faster. After the HELOC was paid off, it was closed. So a temporary fix, a temporary vehicle. What are the basics of a home equity line of credit? Like I said, it is a credit card against the value of your house. The payments you're billed on would be simple interest. I would always advise pay more towards the principal. You thought you're going to sell your house in the next couple years, maybe you just pay this simple interest every month and it becomes all about cash flow. You have to decide. There may or may not be an annual fee. They may or may not want an appraisal. Ask these questions though when you're seeking out a home equity line of credit. Probably hundreds of these conversations over the years about home equity line of credit. How do I get one? What are the best ways to go about it? Where's the best place to get a home equity line of credit, etc. Most importantly, think about those that you care most about. And if that debt is really weighing you down, we know financial stress is one of the worst stresses we can have in life. It can shatter relationships. Get educated and make the right decision. I really hope that you found this valuable and useful. If so, make sure to like the video, and I hope you stick around for future content about building verticals of wealth through real estate.